Hello and welcome back to my channel. My name is Panos and this is the third week where I'm doing this new project of sharing my thoughts about the dividend growth portfolio I started this year and in general my views and comments on the markets on this channel. Together with it I also have a Substack newsletter where I write every Saturday and I share there my ideas, my comments and also updates on what happened on the portfolio journey that I started in January. This is a dividend portfolio. It's again an introduction. I am doing these videos in a way like freeform, and obviously I want to continue doing them every Sunday. My idea is that perhaps in the future, maybe in a couple of weeks, I'll start doing the same kind of videos of expanding on the newsletter on Substack, but maybe in a live form, like a live YouTube video. Perhaps there would be, some people watching live and having this interaction of live comments, etc., which I very much enjoy. So, to begin with, I will start by saying that I have started this dividend portfolio in January of this year. I make fixed contributions each month and then I deploy them, I allocate them based on the, stocks in the companies that I'm interested in. If you want to learn what I'm buying, as I'm buying it, let's say on the same day, basically at the same moment, the best way is to follow me on X. You can find links in the description both for my newsletter and on X or Twitter if you prefer. I call it X since it's called X a long time now, or X, I'm not sure, but you get it. And so the theme of this week is basically about discipline, that already it's basically 1 week to the end of March and the first quarter where this portfolio has been created and going on. So it's quite early in the journey, but I have already sold 2 of my positions that I bought because, new investor makes mistakes and it's quite, let's say, in a way embarrassing to do these mistakes and publicly acknowledge them, but that's fine. So basically the performance of my portfolio so far this year, it's down 7.4% or 5.66% approximately, if you exclude the positions that I have already sold. But when it comes to the core of the portfolio, what I'm interested in, meaning the returns in terms of dividend, which my targets are 4% dividend yield and 6% annual dividend growth of the holdings of the shares I hold, were well within it and I'm very happy with it. So basically I have sold 2 companies this year. One was a Lithuanian company. As I'm based in Estonia, I was following it and I thought that perhaps their commitment to the dividends quite bigger. It's called Arteas Bankas. And then this week, I believe it was on Wednesday, Evolution AB from Sweden announced that the decision for the 2025 dividend, the payment of it, is the dividend is going to be cut down to 0. So I didn't take time at all. I just immediately got rid of my position. And what I did is that I reallocated the free funds to VICI Properties, which I already had in a position. And now this position has grown to the second biggest in my portfolio. So currently, the top 3 positions I hold in my portfolio is Wolters Kluwer from Netherlands. The second is VICI Properties, which is a real estate investment trust. And the third is Realty Income, again, a real estate investment trust. The reason why I did it is that because there is no dividend, there is no reason to hold it in my portfolio. Should there be different circumstances, for example, during the COVID period, a couple of companies, let's bring up Shell, I also mentioned it in my newsletter as an example, they cut the dividend, but they mentioned that, it's extraordinary circumstances and that's not a policy and it's something temporary. And ever since actually Shell has, kept up the pace, instead the dividend is growing quite fast and it looks quite safe. So if that was the case, I would, take some time to assess and think how I'm going to proceed with a holding, let's say in my portfolio, that the dividend is either cut or reduced for some reason that it's out of the ordinary. But since the company decided that its best use is just to cut it, to allocate elsewhere the funds, nothing to discuss. Now, when it comes to market news of this week that I've been following, is that, currently the S&P 500 is about 5% down for the year, and it drags the worldwide market with it, as it's basically the baseline for the world, the US stock market. And a couple of stocks, one of them is Unilever from Amsterdam. I've been following it since it's a darling, let's say, stock for dividend investors, and currently the pricing of it is around 53 euros. I'm mentioning euros because I'm based in Europe, in Estonia, so basically euro, it's my base currency, even though I do have holdings in the US dollars, of course. So around 53 euros, Unilever looks attractive. The yield's approaching 4%, but the company currently is in the process of splitting its business after selling the ice cream business earlier, I believe it was last year, Magnum, and now it's in the process of splitting the business between, basically they want to focus on beauty, well-being, personal care, and stuff like that, and they want to basically, at the moment they're in discussion from selling the full food division, which includes very popular and well-known brands like Hellmann's, Knorr, Marmite, etc. And this is in the tens of billions. That might be good for the company, but I cannot start and initiate a position, because the thesis of why I bought this, stock might change so fast, like within the next year. So at this point, even though it looks attractive, I'd rather wait. Now, something I want to bring up, even though it doesn't have to do with dividends, but it does have to do, with the stock market, is Meta Platforms, Meta, which, kind of officially mentioned that they're killing the, metaverse project after burning tens of billions of dollars. Basically, the company 5 years ago changed its name from Facebook and to Meta to represent, this new, let's say, focus of the company. And this project, basically they just burnt money and time as to nothing. And even though Meta over the past 5 years has outperformed the S&P 500, it's still, its return is about the same like Apple, which honestly is a way more conservative company in terms of where it's allocating its capital and what R&D does, etc. And it seems to me that even now Meta is, let's say, focusing on AI. The real AI play is Google, where the return is much, much higher than Meta's over the past 5 years. And, I want to keep this podcast and my newsletter as, solely focused on investing, but geopolitics affect how we invest in the markets and the economy and finance in general. So the point is that what's happening, in my opinion, in the Middle East is quite complex because Iran has demonstrated that, if it's going to go down, it's going to take the world economy with it. If it decides to, unleash a massive attack on the refineries and the, natural gas or petroleum storage of Saudi Arabia or Qatar or Kuwait or United Arab Emirates or anyone in the region, even if, the US then, together with Israel or all these countries, go all in on Iran and they completely devastate it, still this infrastructure is going to take, literally years and years to bring back up to speed where it was. So the energy prices are gonna be like way high for, I think, a really long time. And it seems to me that again the winner is the US, which is an sufficient country. Basically, it's an energy exporter and doesn't care what's gonna happen to the rest of the world. And this situation together, with the continuous uncertainty that's been going on in the world, has pushed the stock market, as I mentioned, a bit above 5% down, a bit over 5% down. But for me, that I just started this new dividend portfolio is great news. If you're not prepared to stomach, let's say 15 or 20 or 25% drops of your holdings, you're not meant to be in the stock market. And anyway, if you're in this game, not for trading but for investing, for 5, 10, 15, 20 years, your horizon is that long, it very little matters where the market is going to be in the next month or the next 1 year from now. If anything, since you identified the companies that you're interested in putting your money in, it's like, I think, fantastic news, because then you get something at just a discount. I mean, if I see a summer house, I bring the same example in my newsletter. If I see summer house, or let's say a house that's 200,000, right? And then after 3 months is 190 because, the market sentiment is down. It's exactly the same house that could have bought for 200 and I liked it. And if, I wait and 6 months have passed and perhaps I'm building some, initial deposit or down payment or something, and now the house is at 160, I mean, it's still the same house I would have bought at 200 if I liked it, and now it's in a 20% discount. So, you should take advantage of it, and it seems to me that the only way to deal with the increasing energy prices in the future is just to do that, just to